So the memory trade has been in complete freefall for the past few weeks, with companies like SanDisk, Micron and Western Digital down by as much as 30% in the last month. Meanwhile, most commentators are predicting eventual bounces back up at the bottom of technical indicators. There just seems to be no end in sight to this downturn. While I do think this was always going to happen, I will put my hands up and say that this happened a lot sooner than I actually expected. So, in this video, I'm going to go through what is actually moving this market downwards in such a violent fashion. Then I'm going to go through what the actual facts are versus the noise, and then I will tell you what I'm doing. So let's begin, shall we? So just a quick note before we begin, I think it's really important that we start with a full picture of what happened and how it materialized. So if you've followed me for a few weeks now, some of this will feel like old news. However, there has been important new bits of information have come to light since, so genuinely, just stick around. So as we all know, the semiconductor stocks are down massively over the course of the last month. For instance, SanDisk is down by about 20%. It's probably more like 30% at its all-time highs. SanDisk is down by about 34% in the last month, and Western Digital is down by about 31%, which is pretty bad. So the market correction all began right after Micron released their record-breaking earnings, when Bloomberg released this report, which said, and this is Wall Street Journal reporting on it, that Meta was willing to sell its excess capacity. Of course, if you've been following me for a while, you would know that this story, when it was released on July the 1st, was actually old news. A similar story had been reported on May 27th, saying that Mark Zuckerberg was more than willing to sell excess capacity. But it turns out that that story is now true. Meta's in talks to lease computing power to Anthropic in potential $10 billion deal. The economics of this deal are very interesting. Meta is in talks to rent computing power from its artificial intelligence data centers to Anthropic in a deal that would be worth as much as $10 billion over 2 years. Anthropic proposed a deal in June and Meta is considering it, said the people who were not authorized to discuss confidential conversations. The article goes on to say Anthropic's proposal to Meta would be about a third of the size of a deal that the AI startup signed with Elon Musk's SpaceX in May. Under that agreement, Anthropic is paying the rocket company $45 billion over 3 years, or about $1.25 billion a month for computing power. Now, I think the economics of that deal are very interesting, and especially the fact that Anthropic are spending a lot of money with a lot of these hyperscalers to ramp up their ability to produce bigger and better models. However, there are signs in this article, and in articles we've read for a number of months now, that this was to be expected. This quote from Mark Zuckerberg has been widely reported for a long while now. Almost every week, there are different companies that come to us from outside asking us about computing power that they could buy from us at some premium to what we've bought it at, Mark Zuckerberg said in an investor call in May. Remember that. We haven't done that yet because we think we have use for the compute. But obviously, if we get to the point where we feel that we have overbuilt, then that is an option that we have. And that is partially what gives us confidence in investing in building this out, he said. Now, a lot of people will focus on the fact that Zuckerberg said he is willing to sell compute when they have overbuilt, and that gives him confidence that they can do that at high rates. I actually believe what this tells us is that what some of these hyperscalers and these frontier model companies are willing to pay to access compute now is so high that the return on investment that companies like Meta or SpaceX could earn is just so astronomical that it's hard for them to say no to, and it allows them to increase their build out. It's subsidizing their current plan to build out. I always bring this up, but if you ever doubt what Meta's future plans are in AI, just look at this one statistic. If we zoom in here, we can see the first quarter 2026 financial highlights for Meta. And as we can see, revenue from the first 3 months of to March 31 in 2026 and 2025, their revenue, top line revenue, increased by 33%. Why do you think that is? It's because AI was placing their ads way more efficiently to gain way more CPM and RPM. Honestly, it's fantastic. So that rumor, which has now become reality, is what originally began the fall of these stock prices. Then the Korean markets began to what can only be described as self-destruct. There were rumors that the Koreans had been leveraging themselves enormously, using equity in their businesses and houses to participate in the AI trade, which, as that was circulating, I could tell was not good news. And that's come to light. Goldman released a report, which unfortunately I'm not privy to, but it exists in this tweet, tells us all we need to know. As of July 13, a total of over 1.2 million leveraged retail accounts across the Korean markets triggered margin calls. Approximately 320,000 to 360,000 accounts were fully liquidated by brokers. South Korea has an adult population between aged 15 to 64 of 35.7 million people, i.e. 1 in 30, 3.4% adults got margin called. That's insane. Of course, this has all been made worse by the fact that only a couple of days ago, the South Korean central bank raised its policy interest rate by 0.25% to 2.75%, in line with expectations and kicking off a monetary tightening cycle aimed at containing inflationary pressure spurred by the AI-driven semiconductor boom. So you have hundreds of thousands of Koreans being margin called on their accounts, and they're all in on these semiconductor stocks that you also are invested in. But there is one stat that you must remember. More than half of all stock market circuit breakers on the benchmark Kospi trading curbs activated when the index loses more than 8% for at least a minute in South Korean history have occurred in the last 6 months alone. You must remember that the South Korean composite index is the complete opposite of volatile usually, but that hasn't been the case because of all of this leveraging, all of the speculating, and the enthusiasm for the wild stock rises that's been happening over the last 6 months. Oh, and by the way, follow me on X. The link is in the description. So just from those two stories alone, the Meta overcapacity story and the fact that the Koreans had been highly leveraged has caused enormous selling pressure in the market. But that's not the only thing causing this downturn. Oh, and before we get into the next thing, if you're enjoying the video and getting some value out of it, I'd really appreciate a like and a subscribe. It really does push the channel forward. Also, I did find out, thanks to some fantastic viewers of mine in my last video, that if you do hit the hype button, it does in fact help push the channel even more than a like does. So if you can hit that, I'd be very much appreciative. Now, back to the video. Not only did we have those two events happening one after the other, we also had enormous liquidity events happening as well. Remember, Google raised about $80 billion for their AI build-out at the beginning of June. Amazon also secured a $17.5 billion loan facility in the middle of June. And who can forget the SpaceX IPO, which raised $75 billion. And of course, SK Hynix listed only a week ago, and they raised about $26 billion. If you add up all of these IPOs, you get around $200 billion being raised in the last 2 months, which is an enormous amount of money. You don't need to be a mathematician to think, where's all this money going to come from? Well, it comes from people's investments in other stocks. And as a result, there becomes an enormous supply and demand imbalance. And unfortunately for us, it doesn't feel like it's going to end just there. There are rumors that Samsung is going to be listing very soon. Even though this article says Samsung's Electronics denies report that they're going to explore a US listing similar to SK Hynix. You know, on Tuesday, Bloomberg reported that they held preliminary discussions with banks, but have not yet made their decision without whether they will proceed, citing people familiar with this matter, adding that discussions might not result in a listing. But let's face it, I think there's a high chance that it does. And also, Anthropic is moving closer to a mega IPO this year, which is going to raise probably along the lines of tens of billions of dollars. And I hate to say it, but the truth is that the liquidity for those IPOs is going to be coming from people already holding the likes of SanDisk, Micron, SK Hynix, Western Digital, probably some of the hyperscalers too, or the other bottleneck companies. So the liquidity is going to just keep getting worse. Also, I need to note here that if you remember when the market really became focused on this trade a couple of months ago, around 3 to 6 months ago, there was only a couple of names you could really trade, the bottlenecks that were accessible to a lot of traders. For instance, SanDisk, Micron, Western Digital. For instance, Micron is an important one here because they were really the only name you could trade that had access to high bandwidth memory and were producing it. Now, SK Hynix are on the scene and Samsung might be. That's just competition for the same type of investor. And something I always have to bring up in these videos is that after a parabolic run, there's a lot of investors who have made an enormous amount of money, an enormous amount of profit. And as you get slight correction territory, down 10 to 15, 20%, they start looking at their profits and they think, why would I weather this storm? I've already made a lot of money. So they begin to sell. And just to finish this segment off, we also need to remember that Samsung actually missed their top line revenue number, which actually caused a bit of a shock. And actually, there's rumors that SK Hynix are going to also miss their operating profit targets because of their long-term agreements that they had made. Essentially, what I'm trying to do is paint a picture that for the first 6 months, there were a lot of these tailwinds, with the exception of Iran, that created an enormous amount of demand for the bottleneck providers. However, over the course of the last 2 months, there's been an enormous amount of headwinds and worries and concerns and rumors and news that have freaked out and scared investors enormously. Now, I'm going to tell you the truth. I actually cut my position on Thursday as I was sitting in a pub garden waiting to watch the England versus Argentina game. I was just looking at all of the bad news, what looked like a complete capitulation of all of the stocks, and I just couldn't believe what I was seeing. There was no real significant news to suggest that we should be worried about future earnings, which is really how you should base these stocks on. I get it, these are cyclical businesses, but there's nothing to suggest yet, in my opinion, that the cycle was about to turn. And the question of how long the cycle will be is one of the most important questions in this trade. I saw all of this capitulation and I was like, I can't hold on for much longer. I want to wait for it to settle. Then yesterday, I believe it was, I saw Micron begin to trade at about $850. Yeah, so I saw it trade about $850. It closed about 848, and in sort of post-market, overnight markets, about 844 going into the weekend. And I think that is probably its bottom before it begins to bounce back up. But I didn't nibble it because I'm not so certain anymore. You could see capitulations in the Korean market when it opens on Monday. I've also said this before in all my other videos that I'm extremely worried about companies like OpenAI dedicating a small team of employees who are extremely smart trying to solve the storage problem. And if they are successful in this and they're able to optimize storage compression where they can fit in, let's say, 1,000 times more data into a gigabyte, then the whole scarcity of memory becomes a thing of the past. And that's enormously bearish for all of the memory stocks. Even if you believe in Jevons paradox, in the short term, these stocks absolutely collapse. Now, I, for one, can't buy into the notion that AI has no value when I can use it to figure out why only recently I had a massive pain, sharp pain in my knee, and it was able to tell me it was just runner's knee and I should just put ice on it every day. Or when my cat was unwell, ChatGPT was able to diagnose what the problem was, and when I went to the vet said the same thing. Or, for instance, when I wanted to get fit and lose some weight, and it gave me an exercise routine and a diet that was best suited to me. Things that just have enormous utility. I also believe that we're just really early. A lot of the bear case is that these frontier models are just commodities and that China will eventually replicate them a year later for a fraction of the cost, and that they won't need the enormous spend to achieve the same results. And because of this, frontier models might not be economically worthwhile, especially if older models can do most of what we need. So I believe in that case 100%. AI is a commodity. Nobody really cares what model you're using, so long as it meets your general needs of it being reliable, honest, truthful, and quick. But the memory trade, for instance, isn't who has the best model trade, but it is directly correlated to the success of the frontier models. The market got worried about token maxing a couple of months ago because Fortune 500 companies were spending millions of dollars on tokens without being able to figure out what the actual value of those tokens were. Chamath said this in the video and I completely agree. If the cost of intelligence goes down, the use will increase, and it's just simple economic fact. If the cost of intelligence does go down, people are going to use it more, especially more of those frontier models, the smarter models, because intelligence is useful. It can be used anywhere in your life. And I think that logic, the cheaper the intelligence, the more demand for it, is bullish for memory. I don't think it's a bearish case for memory. But ultimately, the only thing that matters in this trade now, and I'm going to be completely honest with you, is how the hyperscalers guide Capex at the end of this month. If they guide higher, and I mean only higher, then the market may rebound. If they guide flat to lower, expect a fall off. Expect another form of 5, 10, 15% downs, because realistically, this trade hinges on Capex spending. And only Thursday, the market actually had a meltdown because China released their own model, which was almost as good as Opus 4.8. If we look at this story from Wall Street Journal, we can see that China's Moonshot AI adds more fuel to Wall Street's chips sell-off. Why is that, you might be wondering? Well, the benchmark results are astounding. Just looking here, you can see that Kimi K3, which is the model's name, is close to as good as Fable 5 and ChatGPT 5.6 Sol on a lot of things. Interestingly, for a Chinese model, it's quite expensive. It's about $3 in, $15 out. But it's an open weight model, meaning that in a couple of weeks, anybody will be able to take the weights of the model and host it themselves. But let me know in the comment section below. Once again, if you enjoyed the video, you get some value out of it, please give the video a like and subscribe. Maybe even hit the hype button. I'll see you in my next video. Bye for now.